Well, Supermicro shares soaring today as Raymond James initiates that stock with an outperform and a $41 price target, a more than 20% upside from here. Stock's down more than 50%, cut in half in the past year. Joining us now is the analyst behind that call, Raymond James Managing Director Simon Leopold. Simon, good to see you. So can we trust that Supermicro is all about the fundamentals now? It's back in the high 30s, which was escape velocity early last year, but they've had these accounting issues.
Yeah, so certainly it has some baggage, but we've applied, I think, a discounted multiple and continue to see upside. So I'm not suggesting it's completely out of the woods as far as investor sentiment goes, given the issues with the SEC filings. But look, they filed all their SEC filings, 10Qs, Ks on time. The newest 10Q just came out. So they're on board. And look, the issues that did occur last year that put them on, I think, the back burner for many investors are largely cleared up. But it does take some time for investors to regain confidence. So I think this is a good entry point for the stock, given essentially getting these issues cleared and moving ahead with the fundamentals.
Now, whenever I've talked to Charles Liang, the CEO, he is talking about liquid cooling and their building block technology, the idea that you can more quickly roll out their AI equipment in a way that's going to be lower cost, higher efficiency to operate. Has the storyline around the demand for that changed at all?
I don't believe it has. Now, clearly the industry is in somewhat of a valley between generations of the GPUs, the key technology that enables AI. So that contributed to the negative pre-announcement on the recently announced quarter. But I look at this as very much transitional, and it affected companies like Hewlett-Packard last quarter, and we think it will affect peer competitor Dell this quarter as well. So it is an industry transition, but we believe that the Blackwell generation, which requires this liquid cooling, creates, I think, a very much a new cycle here.
The Saudi investments in the U.S., but also the investments and the access that American companies, including American tech companies, are going to get to build out data centers and AI capabilities in Saudi Arabia. That was announced today. Is Supermicro poised to be a winner in all of this?
I believe the simple answer is yes. They're already with some of the leading AI builds like XAI and CoreWeave. So they're in some of those headline-grabbing projects. And so we do think they're very well positioned. And one of the aspects that make us like this stock is among the branded vendors, they've been a steady share gainer over the last several years, where they're really putting up good competition to what we call the white box or unbranded suppliers. So they have about 9% among all vendors into AI platforms and about 30% when we consider the branded platform. And we think that as this market evolves to more of these tier two sovereign networks like Saudi Arabia, we'll see companies like Supermicro doing better and better.
It sounds like you think the worst is already priced in and maybe even the worst is already over for Supermicro. What's the biggest risk to your investment thesis right now?
Yeah, I think the biggest risk right now is really related to two factors. One is the ever-changing tariff environment. Now, that affects everybody somewhat equally, but the fits and starts have really sort of put a damper on everything. It looks like the worst may be behind us in terms of tariffs, but the rules seem to be changing regularly. The other aspect is really this transition from one technology of GPU to the other. How does that ramp occur? And what is the availability of that newest generation? Essentially, all the vendors are on allocation for the new generation of chip. And if Supermicro can get at least its fair share, it could do well.